Hello, and welcome to Explain the Charts, your go-to channel for in-depth technical and fundamental analysis. Today is November 7th, 2025, and we are taking a close look at one of the biggest names in the market, Apple, ticker symbol Apple. The stock has been on an incredible run, recently touching all-time highs, and there's a ton of news driving this momentum. First, let's cover the fundamentals and recent events before we dive into what the charts are telling us. Just over a week ago, on October 30th, Apple released its fiscal fourth quarter earnings, which created significant volatility. The company reported a solid revenue beat, coming in at $102.5 billion, an 8% year-over-year increase, with earnings per share growing an impressive 13%. Services revenue was a huge highlight, hitting an all-time record of over $28.7 billion. However, the report wasn't perfect. iPhone revenue slightly missed estimates, and sales in China saw a 4% decline, which initially spooked some investors. But the real story came from the company's forward guidance for the crucial holiday quarter. Apple's CFO projected a massive 10 to 12% year-over-year revenue increase, forecasting what could be Apple's best quarter ever. This extremely bullish outlook, which included projections for double-digit iPhone sales growth, quickly turned the market sentiment positive. Adding fuel to the fire is the major buzz around Apple's push into artificial intelligence. Reports have confirmed Apple is increasing its AI investments and is in negotiations for a landmark deal to integrate Google's Gemini AI to completely overhaul Siri. This is a massive catalyst that addresses a key weakness for Apple and opens up new avenues for growth. Analysts are certainly taking notice, with firms like Bank of America raising their price target to $320, citing strong capital returns and AI potential. Long-term, the outlook is even getting a boost from speculative ventures, with Morgan Stanley predicting Apple could generate over $130 billion from humanoid robotics by 2040. So, with that powerful fundamental backdrop, let's see how all of this translates to the price action on the charts. Looking at the daily chart, we can see the broader story of Apple's performance over the past year and a half. The stock has been in a strong, defined uptrend since a major bottom was put in earlier this year. Let's zoom in on that period in early April 2025, which marked a critical turning point for the stock. Here in early April, we saw a sharp sell-off culminating on April 8th, where the stock hit its 52-week low of $169.21. This level around $170 proved to be a massive area of support. What followed was a powerful reversal, highlighted by the enormous 15.6% green candle on April 9th on extremely high volume. This indicates a classic capitulation bottom, where the last of the sellers were washed out and strong buying pressure stepped in, setting the stage for the rally we've seen since. Now, let's shift our focus back to the most recent price action surrounding the earnings report. As we can see, leading into the end of October, the stock rallied aggressively in anticipation of good news. This rally peaked on October 31st, the day after earnings, where it printed a new all-time high of $277.32. However, notice that the candle on that day closed much lower at $270.37. This is what's known as an inverted hammer or shooting star candle, often indicating profit-taking and a potential short-term top after a big run-up. Since hitting that high, the price has been consolidating in a tight range, which is healthy after such a strong move. To get a better idea of the current battle between buyers and sellers, let's switch to the 1-hour chart. On this hourly time frame, we can clearly see the recent consolidation. There is a well-defined short-term support level forming around the $267 to $268 area. We saw price bounce off this level on November 3rd and again on November 5th. On the upside, immediate resistance sits around the $273 mark, which was tested yesterday before pulling back. The price is currently caught in this roughly $6 range. A decisive break above $273 or below $267 on this time frame will likely signal the direction of the next short-term move. Let's zoom in even further to the 15-minute chart to see yesterday's price action in detail. Looking at the 15-minute chart from yesterday, November 6th, we can see the intraday trends. The stock built a base in the morning before making a strong push in the afternoon, breaking through minor resistance and climbing all the way to a high of $273.40. However, it couldn't hold those gains into the close, selling off in the final hours to finish the day at $269.77. This shows that while buyers are active, sellers are still present at these elevated levels, reinforcing that $273 to $274 zone as a key short-term resistance. Now, let's go back to the daily chart to put all of this together for our outlook. So, to recap the key price levels to watch. The most critical resistance is the all-time high at $277.32. A sustained break above this level on high volume would be extremely bullish and would signal the start of a new leg up into price discovery territory. On the downside, we have immediate support around the $267 level. If that level breaks, the next major support zone to watch is the consolidation area from late September and early October, around $255 to $260. Now for our unbiased predictions. The bullish scenario seems the most probable, and I'd give it a 70% likelihood. The fundamental catalysts of strong forward guidance and the AI partnership with Google are incredibly powerful. A break of the $277.32 all-time high could see the stock target psychological levels like $280, $290, and eventually the $300 mark, with Bank of America's $320 target providing a longer-term objective. This scenario would be reinforced by continued strength in the broader market and positive initial reports on holiday iPhone sales. A neutral, consolidative scenario has about a 50% chance in the immediate short term, where the stock could continue to chop between $267 and $277 as it digests the recent gains before its next major move. The bearish case, which I see as having a lower 20% probability without a new negative catalyst, would involve a firm rejection from the $277 resistance. If the price then breaks below the $267 support, it could trigger a deeper pullback towards the $255 to $260 support zone. This would likely require a broader market downturn or some unexpected negative news specific to Apple, such as renewed concerns over tariffs or China. Things to look for in the coming weeks will be any official announcements regarding the Siri and Gemini integration and early channel checks on iPhone 17 demand, especially out of China. These will be the primary catalysts driving the price action. Please remember, this video is for informational purposes only and is not financial advice. You should always conduct your own research and consult with a financial professional before making any investment decisions. If you found this analysis helpful, please hit the like button, subscribe to explain the charts, and ring the notification bell so you don't miss our next video. Thanks for watching, and we'll see you next time.